You just got paid. Money hit your account. Numbers went up on a screen. But here's the thing, 4,000 years ago, a Sumerian soldier got paid too. Except his paycheck was 300 pounds of barley. And that one ridiculous transaction, it created every financial system you use today. Your credit card, your mortgage, your retirement fund. All of it goes back to one problem. How do you pay 50,000 men to fight when money doesn't even exist yet? Three ancient superpowers had to figure this out. Sumer in 2500 BC, Lydia in 600 BC, Rome in 27 BC. When you line them up, something crazy happens. Each one solved the soldier payment problem differently. Each solution built the next layer of finance. And each solution is still running in your bank account right now. What if our entire global financial system is just military logistics that never stopped running? It's 2500 BC. You're a Sumerian king. You just drafted 50,000 farmers to fight a war. They're 200 miles from home. They can't grow food, can't hunt. They're just standing there in formation, holding bronze spears, waiting for orders. And they're starving. You need to feed them. Today, tomorrow, every single day for the next 6 months. Miss one payment and 50,000 armed, trained killers stop listening to you. This is the original financial crisis, not some theory. This is life or death. The solution seems obvious now, but back then it was revolutionary, standardized rations. Every soldier gets the same amount. Every day, measured, written down. The Sumerians called it shuku, a ration. One shuku was about 60 liters of barley per month, just enough to survive. Barely. But here's what changed everything. They didn't just hand out grain randomly. They created the world's first payroll system. Scribes recorded every single transaction on clay tablets. Soldier's name, unit, amount, date. These tablets weren't just accounting. They were proof. They were contracts. They were the first programmable money. Because once you have standardized rations recorded on tablets, something wild happens. Soldiers start trading them. The archer who doesn't drink beer trades his beer ration to the spearman who doesn't eat fish. Within weeks, these ration tablets aren't just tracking grain anymore. They're circulating as currency. One soldier owes another guy 3 shukas of barley. He hands over a tablet promising future delivery. That tablet gets traded 5 more times before anyone actually redeems it for grain. Boom. You just invented debt. You invented transferable contracts. You invented the promissory note. All because you needed to pay an army. The Sumerian military didn't just hand out food. They accidentally built the entire infrastructure of finance. Standardization, record keeping, transferability, trust systems, debt instruments. Every financial tool you use today came from military necessity. But there's a problem with grain-based currency that the Sumerians learned the hard way. Grain rots, gets wet, rats eat it, and it's heavy as hell. A single month's pay for one soldier weighs 40 pounds. Now try marching 200 miles carrying 6 months of back pay. Fast forward 1,900 years. Lydia, in what's now Turkey, 600 BC. The Lydian army has the same payment problem the Sumerians had, but they've got something the Sumerians didn't. Rivers that wash down naturally occurring electrum, a gold-silver alloy. Some genius whose name got lost to history asked a simple question. What if we standardize the metal the same way we standardize the grain? What if we make fixed-weight pieces of electrum and just declare by royal decree that one piece equals 1 month's salary? The first coins in human history got minted in Lydia around 600 BC under King Alliats. They weren't pretty, weren't symbolic. They were pure military payroll tech. Each coin got stamped with the king's seal, which meant 2 things. First, the weight was guaranteed by the state. Second, anyone who counterfeited coins or shaved metal off the edges would be executed. The coins were irregular, lumpy, ugly as sin. But they were revolutionary. Because unlike grain, metal doesn't rot. Unlike clay tablets, you can't easily forge metal. And unlike any previous payment system, metal coins were both the record and the value in one physical object. The Lydian innovation spread faster than any technology in the ancient world. Within 100 years, Greek city-states, Persian governors, and Mediterranean merchants were all minting coins. But here's what nobody saw coming. Coins didn't just solve the military payment problem. They created a completely new problem that would reshape civilization. Once you have standardized, portable, non-perishable currency, you can do something impossible in a grain economy. You can pile up wealth across generations. You can save. You can lend. You can charge interest. The Lydian army accidentally invented capital markets. Because here's what happens when soldiers get paid in coins instead of grain. After the campaign ends, they don't spend their pay immediately. They can't. You can't eat 12 coins. So they hold on to them. They save them. And then merchants, who are always 5 steps ahead of everyone else, realize something huge. They can offer to hold those coins for the soldiers. Keep them safe. And in exchange, the merchant can lend those coins to someone else and charge interest. The soldier gets security. The merchant gets lending capital. The borrower gets funding. This is how banking was born. Not from merchants, from soldiers who needed somewhere to stash their metal paychecks. Let me show you how it worked. A Lydian cavalry officer finishes a 3-year campaign. He's got 36 silver coins, more wealth than his grandfather made in his entire life. But he can't carry them safely on the road home. Bandits everywhere. So he deposits them with a merchant in Sardis. The merchant gives him a clay tablet, a receipt, promising to return 36 coins on demand. The officer heads home. Meanwhile, the merchant lends 30 of those 36 coins to a trader heading to Egypt. The trader pays interest. The merchant keeps the spread. The officer's wealth is simultaneously in Sardis and in Egypt and in the merchant's ledger. This is fractional reserve banking, 600 BC style. The Lydian military payroll system just built the architecture of modern finance. But coins created a second problem that nobody predicted. Once you can pile up wealth in portable, non-perishable form, inequality explodes. In a grain economy, there's a natural cap on wealth. Grain rots. Surplus has limits. But coins don't rot. Coins can be hoarded forever. Within 3 generations of widespread coin use, Mediterranean societies developed a class structure that had never existed before: the permanently rich and the permanently in debt. The soldier who saved his coins bought land. His son bought more land. His grandson was an aristocrat. The soldier who spent his coins stayed poor. His son borrowed money. His grandson became a debt slave. This is the dark side of financial innovation that ancient historians wrote about extensively, but modern finance textbooks completely skip. The Athenian reformer Solon in 594 BC had to cancel all debts across the entire city because coin-based lending had created a debt crisis so bad that most Athenian citizens were literally enslaved to their creditors. The Roman Republic faced debt rebellions every single generation. The Bible's Jubilee year, where all debts get forgiven every 49 years, was a direct response to coin-based debt spirals. Military payment tech had created finance. Finance created debt. Debt created chaos. The cycle was crystal clear 2,500 years ago. It's still running today. Now jump to Rome, 27 BC. Augustus becomes the first emperor. He inherits an army of 250,000 professional soldiers, not farmers doing part-time military service. Full-time, career soldiers who expect regular pay, retirement benefits, and bonuses after victories. This is a way more complex payment problem than anything Sumer or Lydia ever dealt with. And Augustus solves it with an innovation that still runs your life: the government treasury backed by taxation authority. Here's the Roman breakthrough. Instead of paying soldiers from the emperor's personal fortune or from war loot, Augustus creates the irregular militare, a permanent military treasury funded by a dedicated tax, a 5% inheritance tax on Roman citizens. This is brilliant and terrifying at the same time. Brilliant because it creates a sustainable, predictable funding source for military salaries. Soldiers know they'll get paid. They stop rebelling. The state becomes stable. Terrifying because it establishes the principle that the government can tax its own citizens specifically to fund a permanent military force. The social contract fundamentally shifts. You're not funding emergency defense anymore. You're funding a standing army forever. The Roman military payroll system needed an insane bureaucratic infrastructure. Every soldier's pay, rank, bonuses, and retirement benefits got recorded in duplicate ledgers. One copy at Legion headquarters, one copy in Rome. Officers called exacti would travel to each legion every 4 months with wagons full of silver denarii coins. They'd verify the roster, confirm desertions, add bonuses, calculate equipment deductions, and then distribute exact payment to each soldier. This wasn't just accounting. This was the birth of modern HR and payroll administration. Every direct deposit you've ever gotten follows the Roman military payroll structure. But the Romans discovered something that modern governments keep relearning. When you control the money supply, you control everything. During the 3rd century crisis, from 235 to 284 AD, Rome faced constant military emergencies. Emperors needed to pay soldiers but didn't have enough silver. So they started debasing the currency. The silver denarius, which had been 95% silver for centuries, got gradually reduced to 5% silver by 270 AD. Soldiers were still getting the same number of coins, but the coins were worthless. Prices exploded. Soldiers revolted. Emperors got assassinated at a rate of one every 2 years. The Roman military payroll system, which had created 300 years of stability, collapsed under its own logic. When you pay soldiers in currency you control, and you debase that currency, you're not stealing from merchants or regular people. You're stealing from the army. And the army notices. This is the pattern. Sumer creates standardized payment and debt instruments. Lydia creates portable currency and banking. Rome creates government treasuries and monetary debasement. 3 innovations. 3 collapses. Each collapse happens when the payment system's internal logic breaks down. Grain rots. Coins enable debt slavery. Fiat currency gets debased. And every time, the financial innovation that created stability eventually creates instability. Now look at your bank account. You get paid by direct deposit. Standardized payment. That's Sumerian. The money exists as digital ledger entries. Transferable debt instruments. Sumerian. You save it in a bank that lends most of it out. Fractional reserve banking. That's Lydian. The bank only holds 10% in reserves. Lydian. Your government funds a permanent military through taxation. That's Roman. Your currency is fiat, backed by nothing but government authority. Roman. And when there's a crisis, your government prints money. Debasement. Roman. You're not using some modern financial system. You're using a 4,000-year-old military logistics system that's been upgraded but never actually replaced. Every layer is still there. Every innovation is still running. And every vulnerability is still active. Your paycheck is a Sumerian ration tablet recorded digitally instead of on clay. Your credit card is a Lydian coin that never physically exists. Your tax bill is a Roman military funding mechanism. The architecture hasn't changed at all, only the user interface. Here's what nobody wants to admit out loud. Every financial crisis in history follows the exact same pattern. The payment system works until it doesn't. Sumerian grain payments worked until environmental shocks made grain scarce. Lydian coins worked until debt concentration created political chaos. Roman currency worked until debasement destroyed trust. Modern fiat currency works until what? We're running the same code. We just haven't hit this particular bug yet. Or maybe we have. Maybe we're hitting it right now. Your inflation isn't new. Your debt levels aren't unprecedented. Your monetary instability isn't unique. Romans watching silver content drop from 95% to 5% over 50 years thought their situation was unprecedented too. The uncomfortable truth is this. Finance wasn't designed by economists or philosophers. It was designed by quartermasters trying to feed soldiers. The goal wasn't optimal resource allocation or economic efficiency. The goal was simple. Keep the guys with weapons loyal. Everything else flows from that. Your 401k, downstream of military loyalty. Your mortgage, downstream of military loyalty. Your government's monetary policy, downstream of military loyalty. We've built an entire global economic system on foundations designed to solve one specific problem. How do you reliably pay people to kill for you? Does that make it wrong? No. Does that make it fragile? Probably. Does that mean it's about to collapse? Nobody knows. The pattern suggests instability is inevitable. The question isn't if. The question is when and what comes next. Sumer collapsed into Babylon. Lydia collapsed into Persia. Rome collapsed into feudalism. Each collapse brought a new payment system. Each new system thought it had solved the old system's problems. Each new system discovered new problems nobody predicted. We're living in the Roman phase right now. Fiat currency backed by government authority funded by taxation specifically designed to maintain a permanent military force. The Romans ran this system for 500 years before it collapsed. We've been running it for 50 years since Nixon closed the gold window in 1971. Maybe we've got 450 years left. Maybe we've got 5. The Sumerians didn't know their clay tablet system would fail. The Lydians didn't know coins would create debt crises. The Romans didn't know debasement would kill the empire. We don't know what we don't know. But here's what we do know. Finance started as a military tool. It remains a military tool. The biggest buyer of U.S. Treasury bonds is the Federal Reserve, which exists primarily to fund government operations, which are mostly military. The dollar's global reserve status isn't backed by gold. It's backed by aircraft carriers. The entire system, from your checking account to international trade, is secured by the implicit threat of military force. This isn't some conspiracy theory. This is just history. Finance is, and always has been, weaponized logistics. What do you do with this information? Honestly, there's no clear answer. You can't opt out. You can't use a different system. You're inside the Roman military payroll database, whether you like it or not. But you can see the pattern. You can understand the architecture. You can recognize that when people tell you this time is different, they're saying exactly what every civilization says right before it turns out it isn't different. The Sumerians thought irrigated agriculture made them immune to collapse. The Lydians thought portable currency solved all economic problems. The Romans thought imperial power guaranteed stability. They were all wrong. Maybe we're wrong too. The soldiers who got those first grain rations in Sumer didn't realize they were inventing finance. The soldiers who got the first coins in Lydia didn't realize they were creating banking. The soldiers who got debased silver in Rome didn't realize they were watching an empire die. And you, getting your direct deposit every 2 weeks, might not realize what you're participating in either. But now you know. The money in your account isn't neutral. It's not some natural economic tool. It's a 4,000-year-old weapons system, refined over thousands of years, running on code written by forgotten quartermasters who just needed to feed an army. Everything we've built on top of that foundation is just decoration. The foundation is military. It always was.